Good morning and welcome to another Foundation Friday. This morning, we're lucky to have Jimmy Stark, and he's going to talk to us about how to flip and invest in real estate in today's market. Jimmy, take it away, bud.
Thanks, Jason. Thanks, Joe, and everybody for having me today. I just want to share my story about being an agent, a builder, a flipper, and a developer. And I hope that everybody can get some valuable insight from my real estate journey to help add some value for theirs. So the topics that we want to talk about today, working with investors, how investors work. Obviously, this is from our perspective. Common types of projects, and then evaluating those deals and projects. So I think I know. So Andy, Alec, Joe, and Chris. What's up, Chris? So I know all you guys. So I think this will be a little bit easier for me, being the first time that I've ever presented this information. So bear with me. We have a construction business. It's Stark Homes, and our construction business works with the investment companies that we own to buy these projects. So that's how we have things structured and set up for our real estate investment business. There's a contracting company that does the work, and then there's the investment companies that are the ones purchasing and selling the properties. So now that you guys had a little bit of idea of how we have things set up, I just want to talk really quick about how we got to where we're at and the experience that we have that helped kind of shape our investment strategies over the years. I started as an agent actually at the old John Scott office in West Seattle in 2004. So I've been a licensed agent since 2004. And in 2005, I actually bought our first flip. And it was a disaster, to say the least. We bought this house, and I had worked, I hadn't really done any real estate transactions. And I'd worked one summer with my father-in-law doing handyman jobs. And so, I was 23 or 24 at the time. So I thought I knew everything about real estate and construction from that vast experience that I had over the course of the 6 months or so. And so we bought this house, no inspection. And I didn't have anybody come look at it. And it turns out it needed everything. I thought it was a cosmetic fixer. And so I had no idea that it needed this. You could go up, it was T111 siding. You could go up to it, poke a hole with a screwdriver right through it. And so this was really a blessing and a curse in a lot of ways for us, because it forced me to learn how to do all this work. And so I'd never swung a hammer before this, mind you, either. I think that's something that, I always laugh about, that other than doing cut 2 roofs and then handing tools to my father-in-law, and he would hammer 20 nails in the time it took me to hammer 1. So, I wasn't handy. I didn't have any experience in doing this except for, being the tool guy for my father-in-law. And so over the course of the next, it really took me like 2 years because we didn't have any money. And so by the time I got done with it, the market was tanking. And so after we finally got the house finished, we ended up selling it. And I had to actually, on top of the money we spent to fix it up, come out of pocket another $20,000 to sell it. And we moved back in with my in-laws to save money, because we wanted to be able to buy another project, because of course then that's when there started to be a lot more opportunities for buying flips and projects, because there was almost nobody doing it. Some of the names that you guys would recognize, obviously Jimmy Daynard and Will Heaton, they were just starting up during that time. And there was a couple other people, but as many projects as you wanted to do at that time, they were available. But you had to get them done quickly. So it was only cosmetic fixers that were really happening for flips at that time, because every month that you got done with, every month that you held it, the value was going down. So you were losing money. So it was like paint, carpet, new kitchen, but you didn't change anything. It was just the bare bones for projects at that time. So that's kind of how we, got started. It was like a apartment turnover was a good way to think about it. That's what you were doing. And then we started to do, kind of graduated from there. We started to do full gut projects, additions. We lifted a couple houses, which is, crazy to think about now. You learned after doing the new construction, it ends up being cheaper a lot of times to just tear down a house and build new. That's what we've kind of figured, after doing so many projects, is that, well, shit, we got done with that house. We spent, $250,000. And at that time, it might have costed, $350 just to build a whole new house. So that's one of the things that, we learned over the course of doing these projects, that these remodels, they cost a lot more money and take a lot longer than what everybody thinks. Maybe just something I missed and talk about the transition. For us, we transitioned from, going through this as an agent. Then I was working for a short time with a gal, my best friend's mom, and she was the investor, and I was finding a project and then managing the construction and selling it for her. So that was really a great, opportunity for me to get into doing it without having, my own money at risk. Really, it's just my time. So I had the sweat equity, she had the money, and that was a great partnership. When we were first starting out. So we started doing new construction in about 2018, and that's when I partnered up with another guy, James Burt, that you guys probably know, and we started doing a lot of single family and townhouse stuff, and so that's the evolution kind of how we started out, until just recently we're back on our own and we're doing a lot of flips and DADUs. I think after making this transition in the last year, what I've realized, the DADU craze is even more prevalent than what I thought, and it's because the new construction is it is very tough to build new construction right now. If you're not in a prime location, and I think if you don't have a permit in hand and you're in a prime location, I don't see really any of those projects starting up right now. We had a site in Delridge that we sold this last year, because if we had built it out based on the lower values and the construction costs, we wouldn't have made any money. So, that was a shift that we made pretty quick, that I think other builders that maybe aren't agents, they don't, they're not as quick to react. So, let's see. I'm kind of going off track here from the slideshow. So I told you guys about Stark Homes. You guys are all agents. Have any of you guys done flips or built a spec house before? I know, Chris, you've done flips before.
Oh yeah.
I've done one.
So you guys, I think that, part of what I was going to talk about today was, working with, agents. So for agents that maybe haven't done a flip or built a house, and they're just starting to get into, getting interested in investing, it's really, finding an investor to work with first, because I feel like that's where you can get experience in the investment side of the business without being the one taking the risk. And it's a real asset and value, I think, for agents, being able to find get paid on a purchase of an acquisition property for an investor, and then you're getting the list backs on the backside of those deals. And so it's a really a great addition, I think, for people's businesses, to be able to find investors, maybe they're not ready yet to invest. But like Joe gave me that. I talked to someone yesterday, Janine, and I was helping her out, but it didn't end up turning into anything. But at least having those conversations with agents, that's where I think on my side, what I'm trying to do is making sure that if there's an agent that comes across an opportunity, that they're able to have a resource, an investor, a builder like us to be able to go to with a question, or maybe to purchase the property, and then the agent gets the value of getting a list back after it's done. Yeah, that's I think that's a big focus of why I'm here. I try to think about before the meeting, adding value for people that were a part of it, talking about what's happening on the investment side of the business, and in my opinion, what I'm seeing, because we are a part of a big builder group, and most of those builders do infill building in Seattle. So that's really what I see the most are builders and flippers in the Seattle market. So some of this stuff, as you get further out, maybe doesn't apply because there's more new construction outside of Seattle than in the core. But there's still not a lot of competition for flippers right now. I mean, we bought 6 projects in the last 2 months in West Seattle. So I keep thinking that activity's going to pick up, investors are coming back, and I'm not seeing that yet. I'm thinking, we're being conservative because we don't want to be in a position where we're overpaying for something right now, with it being a little bit less predictable. And other investors, I think, are even more cautious. There's a lot of people that got hurt last year that aren't back in the market yet on the investment side. Builders, it's even slower. I think that's the one of the biggest things that's interesting right now, at least in Seattle. I talked to Jason about this a little bit yesterday, but townhouse builders are almost non-existent right now. A few of them are shifting to the single family ADU DADU sites, which I think everybody that is in Seattle, they're familiar with those by now. So the new construction project here on the screen, that was a 7-unit site we did in Shoreline. That flip that's here, that picture, that was a full gut remodel that we did. That was a couple years ago, but just that was an example of that was a big transformation for a rehab project, where it might have made more sense to tear a house like that down than to flip it. And then the one on the far right, that's a DADU. That's the stock Seattle DADU plan. That's a schooner plan, is what they call it. So a lot of the standalone DADUs that you guys are going to see, especially when there's an existing house that they're keeping, it's going to be this schooner plan. It's 1,000 square feet. There's only 2 stock plans that the city of Seattle has that are 1,000 square feet, and I think this is the better of the 2 plans that they have. So this is the schooner plan. It's a 2-bedroom, 1.5 bath, and it's 1,000 square feet. So I talked a little bit about the new construction, and just that townhouses are almost non-existent. So I mean, the single family, same thing in Seattle. The builders and developers, if they're building new construction in Seattle for spec to sell, they're all going to be doing these single family ADU DADU sites where there's 3 units. So those projects are taking about 12 months for permitting, and then another 8 months to build, something like that. So I'm sure you guys have seen that, this is, if you looked at inventory right now in Seattle, and it's a new construction house, and it's in the core, it's probably one of these sites. It's probably not, there's a few townhouse sites that are still being built out, but moving forward, because of MHA fees, builders aren't really going to be doing townhouses unless they're bigger sites, because you could build a 3-unit single family ADU DADU site and make the same money that you could building a 4-unit townhouse site. And these sites are going to be quicker, easier to build. And so there's really, not a demand for, and they're more like single family homes too. So I think the resale value on the back end is much better for these than it is for connected townhomes. So that's another, important thing with why these units are being built. So for flips, obviously there's, the cosmetic fixers, that's what everybody wants all the time, but even more so now. I think there's a lot of flippers that I talked to, last year they were getting done with a project and they didn't make any money. And so they're less inclined to take on those types of projects now. Just to give you guys an idea, for us, a 1-story with a basement, typical West Seattle house, 1,600 square feet. Our rehab cost is around $200,000 for a house like that. And that's if you're doing a full gut. And that's just the construction. Obviously, there's other costs, insurance, utilities, permits. So that's just for the build out cost. This was a cosmetic fixture that we did. That's right up by Home Depot in West Seattle. And even that was just cosmetic. It was built in the 80s. So, a house built in the 80s, you're not having to redo all the plumbing, redo all the electrical, just the surfaces. We kept that's metal siding on there. We kept the metal siding that was on it. And the nice thing, on those is that there's a quick turnaround. It took us about 2 months to do that project. And we spent about $140,000. And that was a 1,900 square foot house, if I remember right.
Hey, Jimmy, we got a question, if you don't mind.
Yeah.
Angela's asking about, does the owner of a DADU have land rights on the ground that their house was built on? And if not, how do property taxes work? If they do, why is that not an outright single family home?
So when you're building the DADUs and condominiumize the site and selling them separately, there's one master policy for insurance. And so it's just like a condo where you own, you map out the property as a whole, and then you divide up different parts of that lot. Some of it might be shared spaces, if there's like a parking in the back, and but then you delineate on there who owns what part of the property. But there is one master insurance policy that covers both homes in the event that something was to happen on either part, either part of the property, either the DADUs or the main house's property. But yeah, you kind of minimize it, and then it's owned separately as shares. Does that make sense?
It does, yeah.
Yes, this is Angela. I'm just not completely understanding then why is it not just partitioned into 2 lots, for instance, and built? Is that just longer in process? I'm just trying to understand the advantage of the pros of having a DADU versus, partitioning and building an outright new house or a second.
Yeah, that's a great question. Yeah, that's a great question. And tell me after I'm done saying this, let me know if I answered the question. Is that so? these DADUs are being built primarily in single family zones. And so those single family zones don't allow you to short plat the lot less than the minimum square footage required for that zone. So, it's like a 5,000 square foot lot. You can't short plat that like you could in a multifamily zone and have that property be owned as a separate tax parcel. So that's why they're being sold as condominiums and not as separate, property with its own tax parcel. So that's the long and short of it. There's all this, these housing bills. It's going to be really interesting to see what happens with the housing bills, because right now you're able to do one ADU and one DADU on those single family sites. And it's supposed to increase, from 4 to 6 units, depending on the size of the lot in 2025. And whether or not, they're going to have to do something, I think, with MHA fees, because otherwise, once they increase the density in those single family zones to be 4 to 6 units, multifamily, nobody's going to be building in multifamily. Those values are going to be driven down even more, because why would you build in a multifamily zone and pay MHA fees that are like that 5-unit site we had in Delridge that we sold? The MHA fees were $70,000. So if you just figure that, the price of that multifamily lot just went down $70,000, then it really can be prohibitive, to those other units being built. But yeah, it's really just a zoning thing with the city of Seattle. So they're trying to allow people to increase the density, but they haven't actually, changed the zoning requirements yet.
Awesome. Yeah. Thanks, Jimmy.
Thank you. That's perfect.
Yeah. So one of the things that we focused on now is doing the DADUs and keeping the existing home. And the reason that I think you're going to start seeing more of that and even less of the single family ADU DADU sites is because you can get a permit for one of these pre-approved plans in 2 to 3 months and then break ground on construction right away. Where the single family ADU DADU sites, those sites permitting is going to take about a year. So it's great for agents too. What I would say, when I talk to agents about it, when they have a site, we get a lot of opportunities from agents that work with builders, and they're used to waiting 2 years for a project to be permitted and completed for them to sell it. And so we can get one of these sites turned around in 6 to 8 months. You can, get the permit within 2 months. You can do the build out for the DADU in 6 months or less, and then rehab the existing house, usually around, 4 months, 5 months. And as soon as that rehab's done on the front house, you can, as long as you've condominiumized the property, which there is a process to that, you can sell off the front house before you're done building the DADU. So that's one of the reasons that these sites, with financing costs being, higher right now for builders, they're focusing more and more on these smaller projects because the margins are starting to be just as big as the bigger projects because of the financing costs. Yeah, so I was going to talk, about, agents working with investors, because a lot of agents that we're trying to build more relationships with agents that want to work with investors and builders like us, hopefully. And they always have questions about how we work. I think because I've been an agent, I've been on the other end of that before, and so I know some of the questions and concerns that agents might have if they're working with the investor or builder. And I think it really is around, knowing that one, the investor builder, you're always working in the best interest of your client, the seller, if that's who you're representing, right? And so they have to be, there's got to be an extra layer of, honesty and integrity on everybody's, with everybody, especially us, because I'm also an agent. And so, you can't guarantee somebody a list back, at least based on, my understanding and experience. And I think sometimes agents worry about that, taking a deal when they have a seller and a seller tells them, hey, look, I want to see what we can get from an off-market deal without listing it. Because I think we've all had sellers that, have been in that position. I don't want to do anything. I don't want to list it, get me an offer. And when there's more wholesalers out there and investors than ever. And so in the past, when I didn't take advantage of finding a builder or an investor to bring them an offer off market, they would go sell it to somebody else. The seller, I could have got the seller more money, that if I would have just brought somebody into that deal to buy it. And so I think that's something that that agents really need to be aware of, is that a lot of times with certain situations and certain sellers, if they don't have someone that they trust to, bring an opportunity like that to, that might be a completely lost opportunity. That's the agent's so focused on listing it that then that seller goes and is working with another agent. They sell it to someone else, and they've got less money than you might have been able to get them working with another investor builder that you might have brought into the table.
So, Jimmy, are you West Seattle only, or what's your range if somebody did have an opportunity? Or
No, we really King County, I think the greater King County area. We don't, we love West Seattle, of course. If you looked at the stuff that we're doing, 90% of it's in West Seattle, but we just bought a house in Burien. We have a project in UW. We've done townhouse sites up in Shoreline and flip projects out in Tacoma. So, we'll do stuff all over. Now I think, we're really trying to, stay in markets that we know really well. And I think it suits everyone, the seller and us best, because we can pay more for a project that is in a market that we want to be in. And so really King County is the area that we want to stay in and focus on. And that's just knowing the market, right? I think people will send me deals, and if it's outside of the areas that I know, it's hard to make a quick decision, and it's hard to be competitive against somebody if it's a deal that is in Everett that somebody sends me. And I'm trying to come up with the numbers and just getting out to the site to really come up with a good idea of what the cost of that build out might be is difficult. So that's why we really try to focus on the areas that we know, because then we can pay a little bit more because we know we have a better idea of what to expect. Yeah, right. And right now, I think that just goes to the idea of investors want quick, easy projects. For vacant land, what I would say, if you had a piece of vacant land and you were trying to get an idea of what to expect from builders right now, if it's on market, off market, doesn't make a difference, in my opinion, is that builders only want to close on permits right now. So that's definitely something to know as an agent if you have a seller, because we bought a site that the agent brought it to us, and we were willing to pay more money. This was like a year ago, and and then they were convinced that, oh gosh, I just lost my train of thought.
Agent brought you a
yes, and so
deal.
that was
Okay.
when it was the market was better. Sorry, the market was better, when they had brought us the deal, and we were more willing to do a tougher project. And then more recently, now it's like, if it's not, a flat, easy lot that they're going to allow us to close on permits on, then it's not really a site that we go after, And so for new construction stuff, it's definitely, the easy projects are what, the only ones that are really getting done right now for residential. Yeah, I think, like I said before, what we're hoping is that, for agents that we know that are in our office or in other offices for the Madrona Group, and in West Seattle, that they can feel confident, calling us as a resource, as a builder, as a flipper, as an investor, and like Janine last night, I answered some questions that she had. She was asking about, well, what do you think the cost of this rehab is going to be? And there was, they had a loan on it, and the difference between what the loan was and what the after repair value was going to be, I could quickly tell her, hey, this isn't really something for a flipper or investor. There's a different strategy that I would take, because she's representing the seller as like, if you can figure out a way to just get it financeable, that's probably the best thing that they could do for their situation. So just, being a resource for people, maybe it's an opportunity, maybe it's just, I can help give them some insight, answer a question that they have. So, for what that's worth, that's what we're hoping that, for agents that are in our office, that, they feel comfortable coming to us with those questions and opportunities.
Hey, Jimmy, quick question for you. Do you know what your cost per square foot for new construction is right now?
So we get asked that a lot. And what I would say to that question is that it's always changing, because it was the last project that we did that was a townhouse site. Our cost to build, and we look at it. See, this is something else that you would hear different numbers. We are the investor and the builder. So when we evaluate our cost to build, we're looking at the holding costs. We're looking at the total project cost. Whereas, the builders, you might hear a builder throw out a number, but it's their construction costs. It's not their development costs. So it's, for us, it's really hard because every project's different, and we stopped. Every 3 months we get done with a project last year, and the cost would go up. So it's we stopped tracking it over the course of the last 3 years, because literally we would say, oh, our cost to build is $200 a foot, and then we'd get done with a project and be like, oh wow, we spent $250 to build the same project that we just sold 6-7 months ago. So it's going down. I know that any of the projects that we have going on now, and I look back at past projects, I'm like, we're asking for at least a 10% discount off of their price per square foot for our subcontractors right now, and people are doing it. We are getting more calls from subcontractors now than we have since 2009. And first it started out as, hey, do you have any work coming up? And then it turned into, hey, do you have any work right now? We can come give you a bid. In 2008, it turned into, hey, do you have any work? I'll come work hourly. I'll show up. Just pay me cash under the table. So we're not there, but that's the cost of construction is definitely going down. So that's something that is going to help with inventory, because for the last year, I think we're going to see a gap in Seattle, at least with the new construction, because everybody that I talked to in our builder group last year put everything on hold. They backed out of deals that they had under contract and permitting, and so it kind of is, so that lag is going to come up. I don't know where that lag falls on the calendar, but it definitely is there, because there was almost no acquisitions happening for 6 to 8 months last year, when there was just, everybody stopped because builders had a lot of inventory that they were already building, and they started to get nervous. They were finishing projects, and the cost of construction was so high that they're like, wow, we can't make money if prices go down from here, because we're just breaking even now. And that's being last year. A lot of builders were just breaking even because their cost of construction was getting so high, and then prices softened up a little bit.
Yeah, I see.
So that's a roundabout way of dodging that question, Al.
My guys, my guys was about 200 bucks per square foot, and I kid you not, 1 year ago we were discussing 150 a square foot, and I think that's just with mid-grade materials at 200 maybe, without developing the site, no clearing the lot. So it seems like it's pretty hard.
What kind of project was that, Chris?
The one we did in Anderson Island, the vacant lot, we just built the Rambler over there. So I think that one, the cost per square foot was good, but right now, as we analyze properties, it's 200 bucks is what it costs to build, and then whatever development plus the lot.
Yeah.
So it seems pretty high. I mean, everything.
And those just to give you guys an idea, those DADUs are costing $350,000 to build those.
Wow.
So a DADU is 350 bucks a foot.
Wow.
Yeah. And I thought somebody was robbing us when we got done building one of those. And so then I started asking around, and I talked to 15 other builders and lenders that finance DADUs for builders, and they were all saying the same thing. Even guys that are on site swinging a hammer, it's still costing them $300,000 to build one of those units.
Wow.
So yeah, so it's those are small units, so the cost per square foot is going to be higher, right? You still have one kitchen, you still have 2 bathrooms, so, but it's definitely it's really mind-blowing at how expensive, especially on smaller sites, the construction can be. Even for flip stuff for us right now, I'm blown away.
And then Jimmy, in West Seattle, no view, just whatever, like one of those typical DADUs. What are we getting for those right now, roughly?
It just really depends on the neighborhood, because up in Arbor Heights, for example, we decided not to build a DADU up there on a property, on that house that we have listed right now that's pending, because the cost to build was going to be $350. The value of the front house obviously is affected by there now being the DADU in the back, so you have a reduction in value for the front house. And I thought, well, gosh, if it sells for $625, we probably are better off to just flip the house and sell it as a single family lot, because there's fewer and fewer of those properties that are available now, especially ones that are completely remodeled. So, but I've seen stuff up. We have one that is in Alaska Junction, just north Alaska Junction, and I figure that's on a corner lot, so it has street frontage. which obviously is going to add value compared to it being on a flag lot that's sitting behind another house. And we sold one behind another house in that same neighborhood about a year and a half ago for $750. And so I figure it'll probably be about $750 for a DADU, that's got street frontage up there. But 700, well, I'd say 650 to 750, depending on the location in West Seattle.
Yeah, one just closed in Burien. I'm looking at it right now for $484 in Seahurst, which I thought was a pretty good deal. And then they just put
$484.
Yeah, $484. And then there's another site that's being developed right now that I've been keeping an eye on. I have an MLS number if you guys want it. And then the back unit sold for $680. The front unit sold for $485, which I thought was a killer deal. I would have bought it at that price for new construction. 800 square feet.
Burien,
1.25 bath, which I don't get that, but 2 showers maybe.
Well, builders in Burien are struggling. There's one guy that does a lot of stuff there, Mike Davis, and that might be one of his.
Yeah,
that's his type. Yeah. I mean, attached units that are outside of the core are really impacted, when things slow down a little bit, like like they did this last year. So yeah, the values of those, I mean, those are really affordable when, especially, when you think about, he builds for a little bit less, but not that much. So that there's not a big margin to do something like that.
I've seen his sites all over Burien for sure. The quality wasn't quite there, but I mean, his prices are pretty reasonable.
Mm-hmm. Yeah. Even, I mean, if you look at guys like Jimmy Tang, who's doing a lot of the single family ADU DADU, he sold any sites that he had that were not in a prime location in Seattle. Like if it wasn't in Maple Leaf or Ravenna or Ballard or Fremont or Queen Anne, he had sites in West Seattle, sold them and didn't build them out. Sites in Beacon Hill, sold them and didn't build them out. And he's doing a lot of projects, and he has a pretty good sized business. So that they're really tracking their cost. So that kind of gives you a real good idea of what the how the market and the cost to build is affecting construction so much, because those more affordable neighborhoods aren't getting those units because of the cost to build.